and welcome. I'm Alison from FX Scouts, and in this video I want to cover a chart pattern that is very frequently seen and one that, if you can identify correctly, will help you to create more precise entries and exits. So the pattern I want to describe is the double top pattern, and I want to show you how to trade it. A double top is a bearish reversal trading pattern. It's made up of two peaks above a support level known as the neckline. The first peak will come immediately after a strong bullish trend, and it will retrace to the neckline. Once it hits this level, the momentum will shift again to a bullish trend to form the second peak. After the second peak has formed, it will then resume its downtrend. Now, as with all things trading, it's not always as simple as just identifying the two peaks and the neckline. There are some other things that you have to take into account to confirm that it really is a double top. The first is that the price should be clearly moving upward before the pattern forms, as seen by higher highs and higher lows. Then, with the formation of the first peak, it should be reached as a gradual continuation of the price's uptrend. And the following reversal would be seen as common profit taking after a long and gradual increase in price. Then you have the formation of the trough. The trough should reach a 10 to 20% decline of the previous uptrend. So the second peak will form as the price climbs to the level of the first peak, but the resistance from the first peak does not need to be reached. However, the second peak should generally come within 3% of the first peak. Then you get the decline, and the decline from the second peak should occur rapidly on high volumes, often with a few gaps down in price to reinforce the strong selling pressure that has emerged after the failure to breach the resistance of the first peak. Then you'll get the support break, and the decline of the double top reversal continues with a sharp break through the support provided by the bottom of the trough between the two peaks. And the downtrend should continue for some time before another reversal or pause. How do you trade a double top? Well, there are three ways to trade the double top. So firstly, you can wait for the price to cross below the neckline, which would confirm the double top pattern and perhaps signal a trend reversal. And you can start a short trade or sell position after the break happens. Then, to reduce your risk, you should think about setting a stop loss order above the most recent swing high, and you can project the vertical distance between the neckline and the highest peak downward from the neckline to determine your profit target. Secondly, after the neckline has been broken, the price may occasionally retest it from below before continuing its downward movement. As part of this technique, watch for a price break below the neckline, wait for a retreat to the neckline, and then search for a bearish confirmation signal, such as a bearish candlestick pattern, a trendline break, or a lower high to place a short trade. And thirdly, of course, you can also use other indicators to confirm the bearish reversal. For instance, you can check for bearish divergence on the MACD histogram or the relative strength index when the indicators display lower highs as the price develops the two peaks. And following the stop loss and profit target criteria, you can place a short trade once the neckline is broken when the indicators confirm the bearish signal. Then traders sometimes make mistakes by moving too early before the double top has confirmed that it is indeed in a bearish downtrend. And the main area is that they place their trades before the support level of the trough has been broken through. And you should note that the double top reversal is not truly confirmed until the break below the support has actually occurred. And this is particularly important because 3, 4, and even 5 top patterns are very common in long-term price action. And only after the trough support level is broken can traders be confident that they have identified a true double top reversal pattern. And again, just to emphasize, double top patterns are by no means certain trend indicators, and you should always use other trend indicators and look at your fundamentals before you make a decision on whether to enter or exit a trade. Thanks so much for watching. If you have any questions, please send them through to fxscouts.com or write your comments in the comment section below. And remember to subscribe and like.